right, everyone. Good evening. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Welcome, everybody. Want to do a quick sound check just to make sure you guys can hear me okay. We are streaming live via GoToMeeting and YouTube as well. So there we go. Donald says A and V are good. Audio and video good from Sherman, Texas. Elaine says all good. Well, fantastic, everybody. We are live, like I said, from the Charlotte, North Carolina area. Gorgeous evening tonight. I don't know how it is near you, but we're looking at about 70 degrees. Just a gorgeous evening. I'll take that on February 16th all day. Love to know who you guys are, where you're joining us from. Lorraine says good here in Brooksville, Florida. Awesome. Sal, good evening. Lindell says, all good here in Australia. Beautiful morning. Wow. Well, good morning to you. Mike says, hearing and screen okay. Good. Neil says, Sydney, Australia. Awesome. Sal, Myrtle Beach, not too far from us. George from South Florida. Michael from snowing in Kansas City. Oh, that's too bad. Peter from BC. David from Phoenix. Cody from San Francisco. Elaine in Montreal. So all across the world here, guys. Australia, Canada, U.S. You know, we have databases and we have markets. South Africa, Europe, UK, Canada, U.S., of course, Australia. So it's great to have you guys here. My name is Jerry D'Ambrosio. I'm the manager of educational content here at VectorVest. Just to warn you guys, I woke up this morning quite congested, if you can hear. So just pardon me if I have to take a second or two to catch my breath, maybe take a drink of water. You know, in my household, when the kids get sick, daddy gets sick. So that's basically the situation over here. But bear with me. I will get through today with flying colors, I'm sure. So this is our education team. Just like to introduce you to the gang here. We always like to make sure you guys can, you know, put a face to a voice. You know, you hear us a lot, but you know, this is our education team. I've been with VectorVest now 16 years, and you know, when I first started, Steve Chappell, gentleman to the left of me there, or to the right of me, if you're looking at us, he was one of only maybe 2 or 3 folks in the education department back then, and our education back then really focused on the VectorVest program. Everything and anything that is involved in the VectorVest program, from, you know, of course, our method of analyzing the market, our method of analyzing stocks, how to build watch lists and run searches and build portfolios and run back tests, and just all the bells and whistles within the program. And that's what it was primarily focused on back then. We've evolved over the years, and now we teach folks how to trade options and how to manage a retirement portfolio. And we teach different swing trading strategies, and technical analysis really is a big part of our education department as well. So very proud of these folks. We've come a long way over the years, and you know, you guys are in good hands with any of the content that we put out. So what we're going to talk first about is what you're going to learn today. What you're going to learn today, first, the difference between fundamental investors and technical traders. Boy, if you get those two in a room together, it could become quite contentious. They have strong differing opinions on what moves the market and what moves the stock's price. So we'll first understand and dive in a little bit to what the difference is between the two. And then we'll talk about how we merge the two. Okay, now merging the two meaning being fundamental analysis and technical analysis, is not a novel approach. It's not something that we are kind of coming up with. This is done successfully by the very best investors and traders, you know, in the game today, because they will take and pay attention to both fundamental valuation and what price is currently doing, and using different technical indicators and moving averages. They give you a nice insight on, you know, potential future price appreciation or depreciation. So we're going to talk about how we merge the two. And then finally, once you learn the theory part of it, we're going to show you how to quickly and easily identify trades or investments. Because we're going to look at this today through 2 different lenses: the fundamental analyst's lens and the technical analyst's lens. We're going to look at a couple of stocks here through both lenses, but hopefully, if I do my job, we are going to merge the two, and you'll learn how, no matter what type of trade or investment it is, really what to pay attention to. I think this will help too. If you guys stick with me to the end, I will share with you a copy of today's slides. Just somebody remind me at the end. I sometimes forget. We'll be together for about an hour. So what are we? We're about 6 o'clock now. About 7 o'clock Eastern time. Say, hey Jerry, don't forget the slides, and I'll put them, excuse me, in the handout section of your go-to meeting control panel. Okay. So the two different camps of investors are the fundamental analyst. Okay, the fundamental analyst. Or fundamental analysis is a method of evaluating a company to determine the intrinsic value of that stock. Okay? Buy and sell decisions are made based on whether the stock is trading at a bargain or a premium compared to its fair value. And some of the indicators that a fundamental analyst will look at: earnings, not only a company's earnings, but corporate earnings as well. They're going to look first at the macroeconomic factors that drive the stock market: earnings, inflation, interest rates. Now, just so you guys know, right now in VectorVest, we currently have a case 3 bull market scenario, which, if you look at our truth chart in the VectorVest program, if you guys are VectorVest subscribers, May 21st of 2003, I think, boy, if that's right, or May 14th of 2003, one of those two dates, in the VectorVest views is our truth chart. Dr. Delito created a truth chart kind of breaking down the different bull and bear market scenarios that we might face. Right now we're in what's called a case 3, which very rarely happens, where earnings and interest rates are rising, but inflation is falling. That's the current situation right now. But a fundamental analyst will look at those factors in helping them determine in market strength and future price or future market appreciation. They'll also look at industry-wide financial strength as well as a company's underlying financial data: their earnings, their liabilities, their revenue, their expenses, their debt-to-equity ratio. A lot of data basically is what a fundamental analyst needs to compile, then crunch to determine what a fair value is for that stock's price. And again, their buy and sell decisions will be based on what the price of the stock is. What the current price is has nothing to do with their valuation model. It's not even considered. Once the value gets spit out, then they'll determine whether to buy or not to buy based on the current price. Now, you can imagine how much work that is to compile all that data. You got to look at financial statements. Again, macroeconomic factors. Dig into the industry itself. Takes a lot of work. With VectorVest, we really simplify it. We do all the work. We take all that data. We crunch the numbers, and then we spit out valuable, useful, actionable information. But that's really what that's the main goal and main job of a fundamental analyst. Find me or let me determine what the fair value is of the stock so I can determine whether to buy or sell it. The second camp is the technical analyst, who could care less about all that stuff. Okay? The technical analyst is concerned with price action. Okay? Price action and volume. That is it. Okay? The objective is not to necessarily predict what's going to happen in the future, but identify likely situations or likely scenarios. Price action is used as an indication of how traders behaved in the past, which gives us some indication on how they may act or behave given similar situations in the future. And it's all based on price and volume. Technical analysts will use price charts. They'll look at trends, emerging trends, strengthening trends, support and resistance, just price and volume behavior to find opportunities. Okay? Now, as you can see, two completely different beliefs and approaches to the stock market, to trading and investing in the stock market, right? So who's right? who is right? Well, if you get these two young men in a room together and they start talking about or debating, the benefits of fundamental analysis versus technical analysis, it could get pretty contentious, right? It could get pretty fierce in there. If I was in the room with them, I would tell them, like, hey, listen, guys, you're both right. You're both right. Both approaches, both methodologies have merit. There's ways where investors make money in the stock market with a much longer term perspective and objective, and there's ways that traders make money in the stock market. Okay, so what we're going to do is we're not going to even debate on who's right. I think they're both right. So our job is to merge the two. Merge the two. Okay, and again, this is not a new approach. This is something that the very best investors and traders pay attention to. There's several ways in which technical and fundamental analysis can be used together. For example, you could build watch lists of stocks that you might be prepared to own long term based on fundamental analysis, but then use technical indicators and technical analysis just to determine when to buy them. The best opportunities to buy, growth stocks that you may look to hold on to for the long term are after oversold price situations, and technical indicators and analysis let us know when those situations come up. Okay? Technical analysis can be used to find, again, favorable levels for these types of stocks. Okay? Also, if you're a technical trader, what you want to do, your holding period is a very short period of time, right? So, timing needs to be right, and exit criteria needs to be applied. Rather tight exit criteria. You can't just let trades go against you considerably one after the other. You wind up blowing your portfolio up really quickly. But a technical analyst not only needs to understand what the shorter term technical indicators and price action is telling us, but hey, let's look at the fundamentals of the company. I would feel much more confident in a swing trade, in a short term trade, if I was trading a stock whose fundamentals are strong, as opposed to a stock whose fundamentals are poor. I would feel much more comfortable about my swing trade if I had both the technical indicators lining up, price action setting up nicely, maybe for either a breakout or a continuation on a fundamentally sound company, as opposed to a company that's poor. So let's take a look at a couple of different ways to go about this. On February 7th, just about a week ago, right? Today's the 16th, when I put these slides together. Here's an example: McKesson Corp. Okay, symbol's MCK. This was as of February 7th. The first thing that we want to do, right? If you're a fundamental analyst, what's the first thing, or your main objective? It's to determine what the current value of the company is, right? All that work that's done, not on our part. Well, we do the work, but if let's say you're not a VectorVest subscriber, the work that would be required of you to determine a stock's true fair value is extensive. As you can see, we give you a value on every stock every day, and it's based on, guys, all of that data that the kind of average investor or someone who doesn't have the tools that VectorVest provides, they have to do all that crunching and analysis by hand, essentially. We take all that data, we give you what we feel the company is currently worth. McKesson Corp we feel it's valued at $503.81. All right, well, is it trading above or below that? Well, currently, or as of February 7th, it's got a price of $363.61. So that's a great start to your analysis as a fundamental investor. If you were to buy this stock, you are paying a lot less than what the stock is currently worth. That's a great thing. And with any investment, whether it's a house or a car or anything, jewelry, it doesn't matter. You want to pay less than what it's worth. Ideally, there are times where you might pay a little bit more for it. It's called paying a premium, but you got to determine if that asset is worth the premium or not. But here, we're looking at a nice discount here. The next two indicators are also fundamental indicators. Relative value looks at the long-term price appreciation over the next 1 to 3 years. Relative safety is an indicator of risk. So again, all of that financial statement data, top and bottom line data, earnings growth rate, sales volume, debt to equity ratio, all of that stuff. That data is included in the relative value and relative safety. So again, you don't have to do the work. We do it for you. RV above 1. By the way, both of these indicators are above on a 0 to 2 scale. When they're above 1, that's good. Below 1, that's bad. So both are above 1. That tells me that this is a fundamentally sound company. They do a good job of consistently and predictably growing their earnings, meeting or beating the street's expectations each and every quarter, each and every year. They do a great job of that. Okay? Here's some other fundamental data, right? Fundamental analysis data. Here's earnings growth rate, GRT, that's earnings growth rate. Here's earnings per share. You got a nice 7.25% yield. PE ratio is rather low compared to the average in the database. Growth to PE is at a nice level of 1.52. This company pays a dividend, so that's great as well. So how long did that take us? 2-3 minutes maybe. I was maybe a little long-winded, but at the end of it, took a couple of minutes. You determined what the value is, what the long-term upside potential is over the next 3 years, 1 to 3 years, and how safe the investment is. So we're looking at a safe, undervalued stock. However, the stock is not rising in price at this time. So that's kind of something that even if the plan was, hey, I want to buy this and I want to hold it for as long as possible, right? Now might not be the time to buy it. It currently has a hold rating. Maybe you wait for the RT to cross above 1. Maybe you wait for the stock to get a buy rating before you enter into the trade or enter into the investment, excuse me. Okay? So, and what does relative time, by the way, relative timing is our proprietary technical indicator. It looks at short-term trend. It's also on a 0 to 2 scale. Being below 1 is telling me that the short-term price trend right now is down. So let's wait for the short-term trend to turn up again before buying the stock. And like I said, a fundamental investor who is looking to hold for the long term might build watch lists of stocks like these to keep an eye on and determine a better buying point than, hey, let me just go out and buy it. I don't care what price I get. I know I'm going to hold on to it for 5 years. That's not that we don't. You're not maximizing your returns that way. Okay, so that's as of February 7th. I'm going to go to our chart here. The hard right edge, by the way, is now we're looking at October 4th. We're talking October 3rd. This is the hard right edge. I'll explain why we're looking at October as the hard right edge in a moment. But let's just look at this last year here, just to kind of drive home how fundamentally sound the company is and how there's no reason why this shouldn't be considered for a long-term growth, capital appreciation portfolio. Earnings per share is fantastic. Relative value has been above 1 this entire time. Relative safety is above 1 the entire time and growing. Earnings growth rate is favorable. At any point here, you could have gone on and buy the stock. Notice the recommendation, the VectorVest recommendation at the top. It's been nothing but a buy or a hold rating the entire time. So we still have our fundamentalist lens on, or glasses, fundamentalist glasses on. And we're saying, you know what? I could have bought this stock. I could own this stock. This stock could be in my portfolio. Well, one of the things that I said earlier was how to blend the two to either buy a growth stock when you see a favorable price and volume situation and not just, hey, I'm just going to go buy it and hold it. I don't care what the price is, right? So let's try to maximize returns. So let's take we all agree that it's a fundamentally sound company, right? We've done that legwork already and determined the value of the company, the long-term price appreciation, whether it's a risky or a safe investment. We've done that. So let's take our fundamentalist glasses off. Let's put our technical lens glasses on. October 4th, hard right edge, what do we see? Well, we see price kind of moving sideways, capitulating here a little bit after a pretty nasty sell-off from about 370 and change to about 340 and change, right? So what is price doing as of October of last year? Settling in to this $340 support zone. It's a demand zone, okay, also known as a demand zone. It used to be resistance back here in May, June of 2022, also known as a supply zone, where supply is deemed strong enough to resist the price from rising any further than that zone. Basically, sellers are winning the battle, the tug of war. Eventually, something's got to give, and one side loses and the other side wins. And here in August of 2022, the bulls won. Okay, the buyers won. They were able to push price above that resistance level again at about 340. And a lot of times, when price breaks up through resistance, not a lot of times, every time when price breaks up through resistance, that resistance level becomes support, and many times what you'll see is an eventual retest of that zone. Technical analysis 101, guys, right here. This is support and resistance 101. If there was one indicator that I would say that you need to learn, one technical indicator, it is support and resistance. Okay? Great buy and sell decisions can be made using support and resistance alone. We're not going to do that, though. We're not just going to use support and resistance alone, because we now have a stock where the fundamentals are in our favor, right? Just because we're looking at things technically now doesn't mean that we've forgotten about the fundamentals or have completely disregarded what the fundamentals of the stock of the company is. We did that already. Now we're just looking for a favorable entry, and price settling into support is not your signal. Okay? Price settling into support is not your signal. Price retracing from support and making a new little mini high there, that's your signal. So I drew that little line there because that's kind of the highest high within this little tight little channel right at support. If I was looking to take this trade, follow me here. If I was a swing trader and I was looking to take this trade, if you're a swing trader, boy, if you see price settling into a support zone, a significant support zone, and it's significant because it used to be really strong resistance, 1, 2, 3 touches before the breakout, and now you're getting your retest of that zone. That's a significant zone. If you're a swing trader and you see price settling into a support area and then bouncing off of it, you better take the signal. That is what you're looking for. Okay, so if I'm a swing trader, I'm recognizing the fact that it's a fundamentally sound company. Good, I feel confident in my short-term trade because I have fundamentals behind me. If I'm the fundamental investor who might be looking to hold this stock or buy this stock for the long term, here's a nice price and volume potential. Price and volume situation where you may think about taking the investment at that point. Okay, so very next day on October 4th, you got your breakout. You got a really strong day. Price closed near the high. It closed above the most recent high there. It did so on some pretty good volume. Okay, if you don't take the trade that day, you wait for follow through the next day at the least. But you do take the trade. I also added stochastics to the bottom, so let's just add another indicator. I mentioned earlier how the best time to buy growth stocks is after an oversold price situation. Does support tell us if the stock is technically oversold? Not necessarily. It's not really what the indicator is used for, but stochastics is. Stochastics is an oscillator that identifies oversold and overbought price situations. It oscillates between 0 and 100. When it's below 20, that's considered oversold. When it's above 80, that's considered overbought. So a growth stock that you want to buy for the long term, but you're looking for a more favorable entry to maximize returns after a stock gets oversold and then kind of climbs out of the basement, so to speak, the oversold level. Here you have so we're coupling indicators now, aren't we? We're coupling a support retracement with a stochastics crossover. Okay, support retracement with a stochastics crossover. Great entry, not only for a short-term trade, but for a longer-term investment as well. Okay, I drew the red line on the chart. So now we're going to look at this. Now, if this was an entry, guys, if this was a situation that the fundamental long-term analysts recognize as, you know, a nice buying opportunity after that breakout on some pretty good volume, how would you manage the investment, right? Well, in VectorVest, we give every stock a stop price, and a reasonable, widely used exit criteria for longer term investments is when we give the stock a sell rating. Angela Akers, who you know writes our essays every Friday now, she's written a lot about how she manages longer term investments. She stays in the position as long as the stock is either a buy or a hold rating. She will sell when it gets a sell rating. It allows you to keep these good stocks in your portfolio much longer because it's a little bit more of a looser stop. You want to try to hold on to it for a little bit of longer period of time. Companies with good fundamentals, we will give it a little bit more cushion than companies with poor fundamentals. That is completely different than what I'm about to talk about here in terms of how to manage a swing trade. Managing the investment is a little easier, okay, because it's just one exit criteria that you're going to follow, and again, a very effective long-term exit criteria is using our sell rating. Okay, simple. With trading, it's a little different. There's a lot more layers to it. There's a lot of different indicators and levels that a trader should pay attention to help them manage the trade. Number one, you take a trade, you got to establish a stop loss. Okay? And with a support retracement like this, I would set my stop loss right below support. That makes sense, right? So if this is considered the floor, I am buying the stock off of the floor retracement. If the floor winds up not holding and then stock price breaks through, you got to cut your losses and move on. So that's where I would set my initial stop. And in this case, I would use the most recent high there, which is a double top almost, right? Two highs right in that same level of about 370 and change. I would use that as a profit target. Okay? I would use that as a profit target. So you know where your entry is, you know where your exit is, your stop loss, you know how to set up and structure the trade. Again, this is going to be a very short-term trade. So I said that you either take the trade on the breakout day or you wait for the day after. You can see follow through the day after. So either way, you're in the trade. So let's see how the trade worked out. But first, you're probably saying, well, wait a minute. This market has been terrible. The market was terrible last year. Okay, why would I have bought that stock on October 4th? Should I have even bought that stock on October 4th? And this is another layer, guys, another piece of analysis that no matter if you're an investor or a trader, you have to pay attention to, and that's what the market is doing. So here we're looking at the VectorVest composite. Here, if you're not a VectorVest subscriber, you know, the price up at the top in candlesticks is what we call the VVC. It's our 9,000 stock index. You can think of it the same way as the S&P or the Dow or the NASDAQ. It's a broad market index, but this index here tracks 9,100 stocks. Okay. So on October 4th, you can see that's the date. What did the market do? Boy, it blasted off, didn't it? Kind of settled into right at the bottom there for a week or two, right? Capitulated there for about a week or so, and then just completely blasted off on October 4th. Our MTI had gotten below 0.60. Our buy to sell ratio prior to that blast off day had gotten below 0.20. Those levels are levels where we think or we feel that a market rally is imminent, and you want to prepare to start buying stocks again when you see it. And by see it, I mean by see the rally. And that clearly happened on October 4th. There's no debating that the market rallied on that day strongly. Our primary wave turned up. We had a green light in the price column of the color guard. Good buying opportunity, for everybody looking to kind of go bottom fishing and bargain hunting. Okay? Now, let me go back. Now, as you can see here from, March, April, May, June, this is 2022, we had two confirmed down situations, right? So the market itself was behaving pretty poorly prior to that nice little bounce on October 4th. So here we have a longer term graph of McKesson from May of 20 to just about a few days ago. The stop price, our stop price here is in blue, the recommendation at the top, and our confirmed market calls on the stock graph. So you might be asking, well, why would I have bought it? Why would I still be holding on to McKesson? When we give a confirmed down signal, our guidance is as follows. We say, listen, we're in a confirmed down. Don't buy any more stocks. If you're a conservative, longer-term investor, you're not going to be buying anything more during the confirmed down period. What you want to do is you want to, going to cash is always an option for you. But what we say, and that's not always feasible for everybody, just to keep going into cash at every confirmed down. We say to stop buying during a confirmed down, and we say to manage the positions that are in the portfolio. And if you happen to sell out of any of them, you don't replace them. Well, look at the confirmed downs that we got. Look at the rating, too, up at the top. This stock never got a sell rating. Theoretically, you could have bought this stock back in May of 2020 and you're still holding on to it today, because if it's a long-term holding and you're using our sell rating as your exit criteria, there's no reason why you should have sold it. None. It never got a sell rating. Okay? So if you've been holding on to this stock, so here's another lens. So I said two lenses, I meant three lenses. Another lens is, okay, I got this stock in my portfolio. Man, I've had it for years. VectorVest just never gives it a sell. The stock price never breaks down enough to go below their stop price, so I'm going to keep holding on to it. What's to say that if you learn technical analysis and understand support and resistance and learn how to use stochastics and really focus in on learning how to use moving averages, not only trading crossovers, but divergences and all these different indicators. If you can learn how to do that, what's to say that you can't supplement those long-term gains with short-term gains, right? You got this stock in your portfolio, but you're getting good now at, boy, prices really kind of settling into this support zone. My investment's not doing all that great. It's kind of, I've given back some profits because prices pulled back, 5-7% off of its high. But I'm seeing a situation right now that might be a nice opportunity for a short-term trade. What's to say that you can't do that? Nothing. Nothing that says you can't buy more of a stock that you already own with the objective of, hey, let's treat this as a short-term trade. If I can make, another 7-8% here and supplement those long-term gains, fantastic. So the breakout, and I have a line drawn here, the breakout to August 26th, stock went up 8.5%. 8.5%, it might not seem like that much, but that's annualized out at 140%. I'm not saying you're going to make 140% a year, but the annualized rate of return puts into perspective the gain and how significant that gain is in a very short period of time. You can see the VVC only went up 0.5%. Why do I have that date? Why August 26th is the hard right edge now? Well, first off, let's kind of walk through the trade. Okay? You enter the trade, what happens? What always happens, right? Price falls the next couple of days after you buy, and sometimes you panic sell. Sometimes you say, I was wrong, I'm going to get out. But you know better now, because the floor is your exit. The stock went down for a couple of days, and boy, look at what it did there on that big green candle. It actually opened right at that support level, man, almost to the penny, and then shot up and closed well off of it. So you're hanging in there, even though price kind of pulled back for a couple of days. You're hanging in there because your exit criteria, your initial stop, has not been reached. Your profit target was resistance, and I don't think I said this, but the way to treat resistance is, look, if you see price settle in and retrace from that resistance level, you take action. You close the position, you take half off, you take action. Well, look at what price did. It actually got there on this day, but it blasted through it over the next couple of days. Satish says, how important is value in our analysis? I think I stated that, how important it was. It's your first piece of analysis. You're determining whether the stock's price is a bargain compared to its value, or the stock's price is trading at a premium compared to its value. It's your first piece of analysis. I don't have to keep harping on value because we did that initially, right? We know that McKesson is an undervalued stock. It's trading for much less than what we feel it's currently worth, okay? So on that August 26th date, that would concern me a little bit because even though the price closed higher than the previous day's close, it closed well off of the high of the session. So, I got an 8.5% gain in a couple weeks. I would look to take profit off the table if I see a retracement back towards this now support level, right? Because it was resistance. What did we say back here? When resistance was broken, it becomes support. We eventually got the retest of support. Now we have this other resistance level that's broken. So we're stair-stepping higher, right? Higher supply and demand zones are being established. Now what happens, though, is we're pulling away from that resistance level, and I see what's called a one black crow. That is a 2-bar bearish candlestick reversal signal. It identifies a change in sentiment. It's a reversal signal. It's by no means a trend change signal. How can it be? Price only went down or has gone down one day after going up for 6 consecutive days. The one down day is not a trend change. It is a potential change in short-term sentiment. You can see some pretty heavy volume on that day as well. So if I'm a trader and I see an overbought, we'll add another piece to it, right? I love stochastics. We said earlier that stochastics below 20 is considered oversold, but stochastics above 80 is considered overbought. Remember what technical analysts do. They study past trader behavior based on similar situations than they would see currently or in the future. So how did traders behave, or how did they act previously when the stochastics oscillator went above 80? Well, let's see. Went above 80 here, price pullback. Went above 80 here, little bit of a hesitation, right? This is dead money if you're in a long position. Went above 80 here, crashed for 2 days, climbed above 80 here. What did the stock price do? That's what they're betting on. That's the bet that the technical trader is making, that traders will behave similarly during similar situations than has happened in the past. So for me, I see a one black crow with the stochastics above 80, and I see follow through the next day. I'm taking the trade off. You're not selling your investment. Why? Because it's not a sell rating. Very, very simple. You've just supplemented your long-term gains on that long-term holding with a nice 8.5% gain in a very short period of time. What could you do? Could you completely just move on and say, you know what, no need to trade this stock anymore? Well, you could. You could find another candidate or another stock in your long-term portfolio. Maybe that's setting up favorably at the time. But why not just keep it in a watch list and keep identifying favorable situations? What would be the next favorable situation? Well, price breaking above resistance recently here. What do I expect? I expect price eventually to come back down to that $370 support zone now. Okay, let's see what happened. Follow my pointer here. There was my exit. I know price went up for the next couple of days. I'm not too concerned about that. I don't need to squeeze out every penny. I bought it here. I sell it there. I'm happy with that. So I'm looking for a retracement back towards that 370 and change support level, and we got it, didn't we? Look at that big down day, right? So I'm saying, okay, I don't know what day, that's beginning of November. I'm saying if this is the hard right edge, and I see price fall back towards support and kind of land right on it, what I'm looking for is a retracement off of it, aren't I? Right? That's what we look for. We look for a retracement off of support. We never got it. We actually got the stock to just completely crash the next day, and it's no coincidence, guys, where it stopped again. It's not a coincidence that price starts and stops at these support and resistance levels. Traders are paying very close attention to these zones. So, boy, the smart money came in right at about 340 and bought the stock on that day, closed well off of the low, but the support level of 340 held again, and there, off of the retracement off of that zone, is another favorable opportunity to take the trade. You still own the stock, or you don't own the stock. You want to hold it, you want to buy it for the long term. Maybe you missed this support retracement, but you find yourself right in that situation again. There's your opportunity. Hard right edge now. And how is your investment doing, guys? If you bought this a while ago, how is your investment doing from August of 2020 to current? It's flat, right? Maybe a little bit down. It's gone down, it's gone up, but it's basically at the same level that it was in August of 2020. So your long-term investment not performing as well as you hoped. But when you get good and understand how to trade these levels, you can supplement, and the way I put it is pad your trading account. Pad your account by adding some shorter-term gains along the way. So what am I looking at as of the hard right edge? Do I see a favorable situation right now? Would I buy McKesson today or tomorrow? No. Price is currently above this support level, but it's right below this resistance level. Okay, right below this resistance level. Now look, if price breaks above that resistance level, there's a buying opportunity. I'd feel even stronger if it broke above that resistance level. I would love for it to come all the way back down to 340 and then retrace from it, settle into that zone and retrace from it. I'd feel much better about that. All right, let's take a look at another example quick. February 7, 2023, United Health Group. I mean, no reason why this stock should not be in your long-term growth portfolio. Price as of February 7th, $492 and change. We think it's worth, here's our value. Remember, $509.84. So it's fully valued. You're getting a slight bargain compared to what we feel the stock is currently worth. How are the fundamentals? RV, very good at 1.33. RS, very good at 1.39. Earnings growth rate, really good at 17%. Nice 5% earnings yield. PE ratio, less than the average, which is good. The lower, the better. This stock also pays a dividend. Nice $6.60 annual dividend. Nice 1% yield there. Great dividend safety, good dividend growth. Our YSG indicator is above 1 as well. That's on a 0 to 2 scale. Another stock where there's no reason why it shouldn't be considered for your long-term retirement portfolio. Okay? Look at the recommendation of the stock. Now we still have our fundamental goggles on, right? We're looking at this over almost a 3-year period. Look at earnings per share. Relative value been above 1 the entire time. Relative safety above 1 the entire time. Really solid earnings growth rate. It has its ups and downs, but it really the entire time been at a really solid level. The stock was nothing but a buy or a hold. We got one day there. It looks like one day where it was a sell, but any time along the way here, you could have bought United Health Group. Okay, let's look at it now from a technical perspective. I'm just going to use support and resistance and stochastics right now. There's a nice breakout above resistance. 1 touch, 2 touches, 3 touches in that $375 resistance zone. You wait for a nice breakout. Look at see the volume spike up down there as well. Good breakout above resistance, good buying opportunity for a trader, good buying opportunity now for, even if it was, if you wanted it to be a longer term investment. Okay? Price rallied, pulled back. Where did it stop? Right at support. Again, it's not a coincidence. It's not a coincidence that price starts and stops at these levels. Price rallies. Now we've established a higher supply zone. Here was the supply zone back here at about 370 and change. As the stock breaks out, it's establishing another supply zone at about 440 or so. One touch, two touches, little hesitation there before the breakout. So you can either, if you got the support, if you got, if you had the stock in a watch list and you saw that support retest there in October of 2021, nice retracement, there's your entry. If you miss it, you get the breakout or the retest of the next demand zone. It was resistance here. Once price breaks above it, it becomes support. There's your demand zone. Price retraces off of it. And now what's happening, guys? You're stair-stepping higher. Your support and resistance zones are moving higher and higher as price continues to move higher and higher. So you're adjusting your buy and sell zones. If this was a long-term portfolio, if this was a stock in your long-term portfolio, let me back up, right? You bought it sometime. You bought it sometime in September or August of 2020. Buy or hold rating. You're keeping it long term. How many opportunities did you have to trade this stock? 1, 2, 3. I would even say 4 on the breakout, but 5, 6, 7. Another one. Another retracement off of support. 8. Now we're stepping a little higher now. 9, another one 10, another one 11. 11 trading opportunities on a stock in your portfolio that you have no intentions of selling until it gets a sell rating, and you are just padding your account with short-term trades based on these supply and demand zones. Okay? Question now becomes, all right, that's all well and good, but how on earth am I going to find these stocks? Right? You just showed me 2 examples, and of course I cherry-picked them. It's important to do that because I want you guys to see what the indicators should say, what our fundamental indicators should be reading, right? Above 1, we want price below value. We want good RV, high RV, good RS, good earnings growth rate, good earnings yield. If they pay a dividend, great. The fundamental valuation part, I wanted you guys to see what the numbers look like because now at this point, it's going to become very easy to identify potential investments or potential trades. Now, the first method is what we call the one-by-one method. This is not my preferred method because this requires a little bit more time on your part because what you would do is you'd go through a list. You'd go through stock by stock. You could go to the S&P 500 watch list. You can just look at the stock viewer. Cherry picking has its time and place. This is not the time and place for it because my preferred method would be using a scan. With our Unisearch tool, you can not only scan for fundamental indicators, you can scan for technical indicators as well. So here's an example. It's not the holy grail of searches. This search is not going to be added into your program. In fact, actually, Prudent Performers is already a search in the Unisearch tool. I just added a little bit of a technical layer to it, right? So we're marrying the two, right? We are blending fundamental valuation. Let's take a look at that first. Earnings growth rate, we want greater than 15%. Relative safety, we want greater than 1.15. Relative value, we want greater than 1.25. And we are sorting by VST. So right there with those 3 indicators, we know that if we were to run this search alone, it would return me a favorable list of potential long-term investments. The last parameter there looks for the stochastics oscillator to just cross above 20. What did I say earlier? I think I've said this 2 times. One of the best times to buy high growth stocks is after an oversold situation. Price pulling off of a new high, likely a 52-week high, if the stock is that good, and that's kind of what you want to look for too, right? Less volatility, the better. But I'm now looking for these growth stocks with those favorable fundamental indicators that have just gone from oversold, climbing out of the basement, and beginning to move higher. So here was one of the stocks that got returned on that day, AEHR. Stock is much higher than it was a year ago. Okay, I got stochastics here, and I have another proprietary technical analysis indicator at the bottom here in yellow called CI, Comfort Index. You guys have heard of the ulcer index? The ulcer index rises the more the more a stock's price falls. The farther it falls, the higher the ulcer index. The comfort index is the opposite. The higher the comfort index, the further the stock's price has risen. So the more a stock price rises, the more consistent and persistent a stock's price rises, the higher the CI rating will go. And CI is on a 0 to 2 scale. Above 1 is good. You can see CI here just crossed above 1. So what that tells me is this stock is beginning to show the ability to kind of weather these storms along the way. And you can see higher highs and higher lows are beginning to establish. The stock was a sell rating there for a while. It's transitioned into mostly holds and buys here. So if I'm looking at this as a trade, I see a very favorable opportunity here. Price is pulling off of a new high. It has kind of settled in to a more recent high here. Stochastics went below 20, and we know because we ran the scan, and we included the stochastics in the scan, that it just crossed above 20. And boy, look at that. Talk about buying the dip, right? That's what traders like to do. So if you're a trader, beautiful opportunity. If you're an investor looking to hold on to for the long term, it also has a buy rating. And the stochastics oscillator has just gone from below 20 to above 20. And look at this one, VRTX, nothing but a buy or a hold this entire time. CI has been above 1 since June of last year. Stochastics has just crossed from below 20 to above 20. Let's take a look at the other times when stochastics crossed from below 20 to above 20. How about here? Was that a good buying opportunity? How about here? How about here? What about here? What about here? And then again, that's what technical analysts do. They look for similar situations and they look for how traders behave during those situations, and that's helping them make decisions along the way. We know that this is a fundamentally sound company. It's a drug company, so you want to be careful with, diversification, of course. You don't want to have too many drug companies in your portfolio. But the RV was good, the earnings growth rate is good, the relative safety is good. We know that because those indicators were included in the scan. That's the beauty of using a scan and not having to go one by one, looking through lists of stocks. You run a scan, it returns the stocks for you. Okay? So you might be asking, well, I've kind of understood both fundamental analysis and technical analysis, but really, how can I take my game to the next level? You have a choice. You could do nothing. That's always a choice. You could do it alone, kind of maybe take bits and pieces of what I went through here today, or you let us show you how to do it, okay? And we're all about giving you answers, whether it's through indicators or just education. We want to get you as close to the end game as possible in the shortest amount of time. So that's why our education team got together and we put together this course called Uncovering Trends, Technical Analysis the Easy Way. In this course, guys, we marry the two. We blend the two. We pay very close attention to fundamental valuation, and then we really use the insights of technical analysis to help us determine the best buying and selling opportunities. Okay? Here's what you get. You get the complete Uncovering Trends course, 6 modules, all the videos, slides, graph resource tutorials, which will be in the university as soon as you guys register. 1 year access to all the material. The mastery package, which will be 6 live mastery support sessions. We're going to be there live, guys, six times. I'll go over those dates in a moment to guide you every step of the way. You will have private, dedicated email support. You can email any of the instructors if you have any questions along the way. We're going to give you 70 days access to VectorVest Premium if you don't already have it. VectorVest Premium includes the Pro Trader technical scans, which become very important in this course. We want to be able to take a fundamental search and add a technical perspective to that scan so that we could find candidates very easily. I'm also going to invite you to 6 swing trading coaching group sessions for the duration of the course. The first session will begin on March 2nd. We teach a lot of swing trading courses here at VectorVest. We got precision swing trading, trade like a pro, mastering moving averages, now this one. And in this swing trading group coaching, we implement those strategies that we teach in theory during those courses. We actually use those techniques in managing a swing trading portfolio. So I'm going to invite you to 6 sessions. Those are live. So you get the full course, 6 modules, 60 plus lessons, guys. 60 plus lessons, 6 live mastery support sessions, 70 days access to VectorVest Premium, 1 year access to the course, and the invitation to 6 swing trading coaching group sessions. Now the course is listed at $1,990. The early bird rate is still available at $1,495. But look, you guys took time out of your day, your evening, to join me here today. So I want to offer the best rate that we have available for this course, and that's $895. I'm going to ask Ray, probably did it already. He did. Awesome. Thank you, Ray. To type in the address that you guys see at the bottom so you can just easily click on it. VectorVest.com/trends. By the way, this is 100% money back guaranteed. If after the course is over, if you've done the work, come to the classes or watch the recordings, do any assignments that are given, and you're not satisfied, we'll gladly give you the refund. So when are the live sessions? What if I miss one? You might be asking. Okay. Live mastery support sessions begin on March 1st. The first module, guys, this is a brand new course. We've never delivered this course before. Therefore, the modules will be leaked out, dripped out 1 week at a time. When you register for the course, you'll go into the outline and you'll say, well, there's nothing here. There's no content here. It's not an accident. The first module will be released on Wednesday. Okay, Wednesday the 22nd. It will give you a full week to watch that module for our first mastery support session, live session on March 1st. The day after that session on March 2nd, the second module will be released. The second mastery session will be on March 8th, and then so on. March 9th, the third module will be released, and so on. These are all Wednesdays. They start at 1 p.m. Eastern Time. Here is the agenda for the course. 6 modules. Again, they'll be pre-recorded. With a new course, guys, we always want to give you the most recent content. So we drip out the modules so that we can record them as close to the release day as possible. Again, we want to give you the most up-to-date content right out of the gate. Module number 1, we'll go into more, kind of laying the foundation for the course, more about the fundamental difference between fundamental analysis and technical analysis. We get into then price and volume structure analysis, the different ways to view price and the different ways to use those different ways. Trending, neutral, extreme market environments, we'll go through that. The importance of volume, and then we get into some trading techniques, candlestick analysis, reversal patterns, bullish and bearish signals combined with indicators such as moving averages, stochastics, support and resistance. Then in Module 4, guys, this is the most extensive module. I think there's about 15 different technical indicators that we'll teach you guys in Module number 4. Moving averages, MACD, Bollinger Bands, RSI, stochastics, ADX, ATR, envelopes. Man, I'm probably missing a few, but there's a lot of different indicators that we'll teach in this module. Module number 5, Trade Management and Psychology. Dr. David Paul does a fantastic job with this. By the way, forgot to tell you guys, myself, Stan Heller, Dr. David Paul, and Ron Wheeler got a very special guest instructor for this technical analysis course. You guys might know Ron from URS coaching group and all of our options courses. Very happy to have Ron helping us out here with the technical analysis course. So you have 4 instructors here throughout the process here. David Paul does a great job with this module number 5, trade management and psychology, importance of having a trading plan, risk management strategies. Boy, position sizing is huge. Diversification and asset management as well. And then the VectorVest Advantage, module number 6, where we combine fundamental valuation with technical analysis to leave you guys with a very solid plan moving forward. Okay? Yes, thank you very much, Ross. Ross is asking me for the slides. And I will put them now in the handout section. Where am I? There I am. Handout section of your go-to meeting control panel. You guys should see that in a second. Okay. Stephen, I'm not quite sure of the question. This is strictly for signals. What do you mean strictly for signals? The indicators themselves that we teach give buy and sell signals, and yes, we will of course go through how to use the indicators for sure. So hopefully I answered that. Elaine says, how does this differ from the swing trading course? Well, which one? Precision swing trading? If all you need to do, guys, if you're looking at what the difference is, take a look at the agenda in the university for the precision swing trading course and take a look at what we're looking at here. You can really get an idea of the differences because the bullet points here kind of explain what the content is in each of the modules. So it's a brand new course. Precision swing trading, we teach a little bit more about technical charting patterns, continuation chart patterns, reversal chart patterns. We don't do any of that here. We really focus on technical analysis indicators more so than chart patterns in this course. So maybe that might be the difference there. All right, you're welcome. All right, thank you very much, Sal. All right, no problem at all. We'll see you in the future, Sal. All right, guys. Thank you, Ray. I want to thank Ray Clark. Ray is our Vice President of Educational Services. He's been in the background the whole time answering a lot of your questions, guys. I really want to thank him for being here. Like I said earlier, it's hard during the presentation because I just talk so much. I got so much content. I don't, don't want to stop and start, kind of take away from the presentation. But I'm here for a few more minutes to answer any questions that you guys have that hasn't been answered already or haven't been answered already. The $8.95 rate, guys, will only be available for a very short period of time. So Alan is asking any consideration for VectorVest Elite members on price. So let's talk about the price. $19.90 is the list price. The regular Elite price for this course is $995. It's always half off the regular price. Notice that how the price that you have available today is $8.95, which is, of course, less than $9.95. So your Elite rate, Alan, or anybody that's Elite, is currently at $8.95. That price, that $8.95 price, will go away in a couple of days. It will either revert back to the $9.95 Elite rate if you're an Elite subscriber, or $14.95 early bird rate if you're not an Elite subscriber. So if you're not an Elite subscriber, take advantage of the $8.95 rate. Otherwise, it's going to go up in just a very short period of time. Abraham says, I'm already taking the Successful Investor course. Do I qualify for another trial if I buy this course? You do not, Abraham. You don't. One trial per customer per year, I think, is our policy. So we don't keep giving trials with brand new courses. If you already have VectorVest 7 Premium, then you'll use that. Okay. You're welcome. All right. Yes, a replay will be available, and you will get that sometime tonight. Okay. Lindell says, I'll be doing some international traveling through March. How much will I miss? Is it possible to see the recordings to catch up? Yes, so you get the course for a year. The mastery sessions are recorded. The modules, of course, like I said, are pre-recorded. They'll all be loaded in there eventually, 1 week at a time. Mastery sessions, after we deliver them live, they're recorded and then they're uploaded to the university within 24 hours. And remember, you have the course for an entire year, so you'll always have an opportunity to catch up. Okay. All right, folks, I want to thank you for joining me here today. I really look forward to working with you. This is, again, a brand new course, never before delivered. Looking forward to getting in here. And if you have any questions, you can always give us a call or email me at jerryd@vectorvest.com. You will get all of our email addresses, all of the instructor email addresses when we begin the course here in a couple weeks. Thank you very much. Really appreciate it, guys, and we'll see everybody real soon. Take care, everybody.